Morning everyone, Dan Trades here, second video of the educational series on YouTube, and the video today is centered around volume. So first and foremost, volume in its simplest form is the amount of trades taking place on a given time frame. And you'll see on the screen in front of us now, we're looking at RMM, which is Rambler Metals and Mining PLC. And you can see where my cursor is here, the volume bars at the bottom of the chart. Beneath that, we've got RSI and stop, but we'll ignore that for now. We'll move on to those another time. So today's video is focused around volume, which is the amount of trades taking place over a given time frame. We're looking at the weekly chart at the moment, so these are the amount of trades that are taking place over 1 week's time frame, which is typically 5 business days, unless of course there's a bank holiday. And you'll see here on some of the bars that we've got reds and we've got greens. Reds just simply mean that it was a down day. The amount of selling there exceeded the amount of buyers, which drove price down. On the green days, consequently, price went up. So there was more activity in the buying than there was in the selling, and so on and so forth as we go through this chart here. Now, what I want to focus on today, as today's lesson really, is volume clues that are typically given before price tends to move. So what has happened with RMM, and I know this pretty well because I was in on 2 of these moves. So I came in around about here because I was looking at the chart here and there was a significant drop. It looked as though it was stabilizing at one point here, but then it crashed further. Seemed to get a bit of support. There was a falling knife, which again I'll talk about patterns another time. It stabilized, a bit of volume entered into the market. So I got in at around here, and price moved up its highest point to what was before 0.43, but because of the stock split that has occurred since, it's now 43. So it went from around about 26 to around about 43. So I think I got in and made about 40% on that move, which was obviously a really nice winner. But it was because 2 weeks prior to that actual move taking off in its fullest, there were volume clues and volume drop off the week before. So when that sort of thing happens, typically what it means is when volume is high, it means that there are people interested in the trade and therefore obviously buying a number of shares at this point, or trading a number of shares. And as it was a green day, there were more buyers than sellers. Sorry, a green week, there was more buyers than sellers that particular week. On the following week, same thing. Price moved only a very, very small margin on that particular given week there. It was only plus 3.92%, which over the course of a week isn't very much, but still volume was high. So we had clues in the market that demand was picking up around about this price, which basically means, as I say, that people think that the price is relatively inexpensive. So that's why price was driven up. And when it got to a particular high here, which was, as I say, around about 43, price then sold off and it came back down to the level of around about 30, which we see here. And again, buyers came back into the market at 30. It was deemed to be inexpensive. Big volume day on that particular, should be, so keep saying day. Big volume week that particular week, which drove price from the beginning of the week at 30 all the way up here to 47. So you can see here that we're starting to get some solid support at this level now. And you'll see by these green arrows here at the 30 level that price seemed to be reacting to that level pretty well. So at this point here, a bit of a channel form there where price was being sold off a little bit. So again, we got back down to that support level of 30. And you'll see at this point, the volume drops right down. And you'll see this red arrow here, which is what I'm focusing in on right now. So prior to this big move, and this is the big move that comes up now, where price went from around about 30 all the way up to 63. So, you know, a very, very large gain there of almost 100%. from 30 all the way up to 60, which is a fantastic achievement. And I was in on that move as well, which was I was very grateful of. But I mean, at the end of the day, here we had volume clues leading up to that point. Price didn't move very much during those volume clues. And then as price dropped as volume rather dropped all the way down to this low level here, where we had 2.69. I mean, days before we were looking at volumes of 12 million, and here we're getting down to 2.6 million. So as you can see, volume is dropping off, and when volume drops off and price is being squeezed further and further down, what that means is they're running out of sales. So in other words, they've sold as much as they possibly can. Demand is now diminished. So when demand comes right the way down, what it means is there is typically nothing left to sell. Okay, and you'll see here when we get to the highs, again volume drops off. And the reason that volume drops off is because it's starting to look a little bit expensive. So when that happens, typically you get a big volume day after the peak, after the spike, where you get a load of people banking profit. Okay, so that week there we have a large volume, but the reason we have a large volume is price was driven up to a high of around about 62, 63. People then deemed that to be expensive and sold off. They banked their profits, which is fair enough. You know, I certainly did. And I must admit, I sold before the highs of this particular spike. I sold mine off at around about this level here. So I wasn't in on the move all the way up to 63. I mean, I'd have absolutely loved to, but I'd rather bank my profits and not be too greedy. And then I'll await another opportunity to come back in, which is potentially starting to happen now, because we're back down to that support level of around about 30. And today, Rambler is back at the support level here. So I mean, if we move that arrow to here, we're back in that support. But at the moment, we're on this micro channel, which is a downtrend channel. That's been going on now for 1, 2, 3, 4, 5, 6 weeks now, where it's been trending down. We need to see some stability, some tight closes back into the market, and volume dropping right down, which basically means that they've run out of stock to sell. There's no demand there. And then we could be potentially looking at another move. There's volume clues, as I say before, because price went all the way back up to 63 at that point there. So there is a bit of demand in the market. So the point of this video is to explain that prior to any big move, what tends to happen prior to the move is you tend to get these volume indicators, which are giving clues that there's demand in the market. Yeah. And that is at a given support level, a given price level. So if you're looking at price here, as I say, around about here is 22. There was big demand at 22 for 4 consecutive weeks on that move. Price came back down to 30, which was deemed to be the new support line. And then price drove itself all the way back up to 63. And again, volume, key indicators leading up to that big move. And then we had the big drop off where demand for that particular stock at that particular price had gone. Buyers returned to the market, and boom, all the way up to 63, a 100% move from that particular support line there. And as I say, starting to look attractive again on the prices, but what we're looking for again here is volume dropping off, which it is starting to be fair. So they are running out of stock to sell, but let's not jump in there too quickly. Let's not be too hasty. And something that I've had to learn is to be patient. You know, wait for your indicators, wait for these tight bars to start showing again, which are, you know, indicated here on the weekly. I mean, you want tight closes where price is barely moving. You want volume to drop right down, and then you want it to stabilize. This is on an uptrend at the moment. It's just dipped this particular week. It's just dipped below that uptrend at the moment, which is, you know, a bit of a concern in terms of how you would look to return. I mean, it is at support level, but that isn't the be all and end all. We need more than that. And typically we want to see it breaking out of a channel at support, and also with the amount of volume dropping off. So as I say, today all I wanted to focus on was volume, what it is, what it does, the key things to look for. Never buy in on a volume spike, because if you'd have bought in here, which at its peak was around about 53, 54, fear of missing out, FOMO as it's known in the FinTwit world. If you'd have brought in there, and that particular week, you might have even been down by around about what 13 pence when it finished, when it closed that particular week. I mean, you'd have been okay the following week and potentially the week after, but it is a risky thing to do, is to buy in on a volume spike. And similarly, if you'd have bought in here, you'd have probably been at a loss for how many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 before you'd have seen a return back to where you bought in. So almost 3 months at a loss because you bought in on a volume spike. Never buy in on a volume spike or even a price spike. You need to set your alerts, set your channels, and buy the breakouts, and therefore you can ride all of these waves. These nice little swings that are occurring now. I mean, I would be inclined to say we need to allow this to cook a little bit further, but this could be another potential swing coming in the coming days, weeks, and months. That's it for now. Hope that this video has given you some insight as to some of the volume key indicators to look for in your trades. Obviously, be mindful that it shouldn't be just focused on that alone. Look at how many red bars, how many support lines you've got, where support might come back into the market, the way that the market is currently trending. This particular stock is trending in a downtrend, so obviously we want that to break. We want it to buck the trend, and we want volume to drop right off so they've got no more demand to sell. Then we might see a return to the market for the buyers. That's it from me. All the best, and I will see you on the next video.